Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Marex, Director with Index Research and Development at Nasdaq Investment Intelligence, to discuss technical indicators and what they are saying about the Nasdaq-100. Mark, it's great to see you as always. And of course, we're in this continued choppy action with the Nasdaq-100, of course, the market overall. What are you seeing in terms of the relative strength indicators?
Thanks, Jill. Great to be back. Let's start off with the 14-day relative strength index. You can see that plotted here in the dashed gray line versus the Nasdaq-100 closing levels in the light blue. What I've outlined here is with a green line going across, that's a level of 70 on the RSI, and the red line going across is a level of 30. Anything below 30 is really, really overly bearish, and you can see that we've touched below 30 earlier this year, and we've also approached 30 earlier in May, and then we've been really kind of far away from anything approaching that green line, right? We're kind of on an uptrend now, but we're still kind of right around 50, even though the index has kind of recovered nicely from those mid-May lows, still very, very far from being kind of overly bullish in terms of relative strength. You can see, previous times where we've had big kind of oscillations from the green into the red that I've circled there, those ovals are much more narrow than the current oval that I've highlighted. That's just kind of pointing out that, this correction we're in right now, we're getting into month 6. It is quite a bit longer than we've seen over the last couple of years.
And Mark, if we take a look at short-term moving averages, what do you see?
Yeah, so short-term averages, we kind of broke below both the 20-day and the 50-day moving averages right at the beginning of the year. We tried to rally above the 20-day and failed several times, going down kind of throughout 1Q. Then we had that recovery towards the end of March above both the 20-day and the 50-day. But then that didn't last long. We crossed the 20 and the 50 back over. And now, most recently, we're back above the 20. But you can see in that last circle on the right, we're still a bit below the 50-day moving average. So, maybe there's going to be some short-term support with that 20-day number. But what you really want to see is that break back above the 50 and finding some more longer-term support with the 50-day as well.
Right. And Mark, if we do look at the longer-term averages, still seeing the struggle to break above those lines.
Yeah, that's what I'm saying, right? It's like once you break below the 100-day and the 200-day, it's usually going to take a longer time to establish better support with those longer moving averages. We're still quite a bit of ways away from regaining that. You could see we tested it back during that March rally, but never really sustained getting above either of those lines. Still very far below. So on these, I'm going to keep an eye out, but really want to see that 20-day and those 50-day first for some level of time.
Right. And Mark, if we take a look at some of the options indicator, put to call ratio we'll get into, but when you look at vol Q, it almost tells a little bit of a different story. It's below that line, but for, it's kind of the opposite of what we're seeing with what those stocks are suggesting.
Yeah, so that really, really tall peak on the left of the chart, that was the COVID bear market in March 2020 when we got up to almost 80 on the vol Q index, which measures volatility for the Nasdaq-100 in particular. And then the line I've drawn across is the line of 40, right? We've kind of approached 40 a couple times since then, most recently earlier this year, but we've never really broke back up into that really, really high volatility range, which tells you this has been a pretty orderly sell-off, right? I think a lot of people have kind of noticed that. It's not been too many days where sort of the sky is falling. It's just like, well, this is a bad day on top of another bad day. But you can see, even recently, the volatility has been kind of cooling off back down to the range of 30. So not overly kind of panicky out there in the market, just continued, oscillation, choppy trading, just like you mentioned.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.